Hi everyone, welcome back to Be Rich. Today we got Sashwath with us again today, and he has a very interesting article to talk about. So without wasting much time, I thought we'll directly jump into it. Shashwath, what is the article all about? What is it about?
This one is a scathing sort of remark about portfolio management services. So, a brief primer for people who aren't aware of what PMS schemes are. Portfolio management services basically denote an organization conducted by a portfolio manager. There's usually a figure who says, "You can come, give me your money, and I'll manage it for you privately." So they're generally certified by SEBI by mandate, and they are supposed to be investment professionals who make higher returns for you than what you would generally achieve with the market. So they're supposed to be people who can beat the market. And the idea is that by investing through them, you're avoiding mutual funds altogether, and at the same time, you don't have to invest on yourself by yourself. That is, you get to have someone invest for you privately, and you get to avoid mutual funds. So it's sort of a double whammy type situation. So in theory, it seems great, and it seems quite plausible, and it's quite nice that a lot of the pitfalls which mutual funds face because of high regulation, like churning fees and your the size of the mutual fund, and mutual funds not being able to invest in small cap, all of that PMS funds are able to sort of circumvent, because portfolio managers working at a time with maybe 6 to 15 crores worth of capital, which is nothing compared to your blue chip ICICI mutual funds, actively managed funds, where the guy has to take thousands of crores and put it into some stock. So he's sort of limited, and there's a lot of pressure with mutual funds. This is a chapter in the Intelligent Investor, but basically, you, as a mutual fund manager, you don't have much of an option, and you have to mirror your other guys, because and you have to mirror the index, because you don't want to fall back too much. And if you do fall back too much, you're kicked out of the fund and you bring someone else. With PMS, that's not the case. With PMS, what they end up telling you is that I am going to be the one managing it, and if you have a problem with me, then too bad. And PMS, the way pricing is with your mutual funds is that they charge you a fixed, maybe 1.5% or 2% of your fund, and that will be your cost. Whereas PMS, what ends up happening is they say, yes, there will be an upfront cost, but also on top of that, if I make above benchmark returns, then I will take siphon off 20% of the returns I make above that benchmark. So there are loads of pricing schemes like that. And PMS, portfolio management services, and their organizations are generally left alone by SEBI, because it's the clients are big, high net worth individuals who have a higher risk appetite and want more freedom in how they invest. So that's the assumption with which PMS is generally an untouched field by SEBI for the most part. But things are changing now, and theoretically, yes, PMS sounds good, but let's venture into some of the problems, some of the cracks which are starting to show with PMS. So, very recently, there have been some new SEBI regulations asking for greater disclosure and greater transparency in citing performance. Because before PMS, what portfolio management services, what they did was the fund manager could pick a benchmark he wanted to, and there were about 10 other methods in which he could weigh his performance, because each individual person had a different portfolio. So with the way PMS managers had to track their performance was up to their jurisdiction. What they could do was they could take one model portfolio system, which is what most of them did, because it gave them great liberality.
Hmm.
Um, Whatever, it
Give
gave
them
them
a lot of
great
freedom.
freedom.
Give them freedom. Let's just say give them freedom.
Yes.
Hmm.
It gave them great freedom in the way they could sort of exaggerate their returns. Because if I invested in, let's say, my uncle's account for, let's say, 10 ITC shares some 2 years ago, and a new guy comes in and I buy the same ITC for 20% more or 30% more, how much of our ITC has climbed since 2020 when we bought it. I can cite my uncle's performance and say that, over the past 1 year, I've made great returns, because I can still show them the price at which I bought them there. And there have been a lot of loopholes like this where PMS fund managers took their clients for a ride. And the clients didn't really have a problem with it, because they still preferred the freedom which they had with their fund managers and the private attention and the personalized attention they got. So there were a lot of loopholes with that. And the SEBI basically said, no, that's not how it's going to work anymore. I want you to follow one or two strict systems of backdating your performance and then giving me your final metric. And this is costing PMS managers a lot of money because professionals have to come in and do the mathematical calculations to be able to come to this number, which they think is the benchmark. Number two, so SEBI also raised the bar for investors in PMS funds from 25 lakhs before, which roughly comes up to 30,000 US dollars, to 50 lakhs, which is 60,000 US dollars. That's a lot of money. And they've also basically said the guys who invest in PMS have to have a net worth of 5 crores now, up from 2 crores. So that basically a lot of your mom and pop PMS fund managers now have to shut up shop because they can't have an AUM very low, because first you have mounting costs, because compliance with SEBI means that you have to bring in professional mathematicians and financial experts for them to be able to calculate your returns and do it in a methodical way. And number two, they also said you have to have connection lines and control rooms where you have to be able to be in constant touch with your HNIs. And number three, there's also a great amount of disclosure which has been brought into it in terms of compliance. So this basically makes it so PMS fund managers are arguing that these compliance regulations are going to make it impossible for small PMS fund managers to do their job, because they won't be able to take on clients below 50 lakhs, which is a large sum of money in India at least. And that's where it stands. And as for the data, 50% of PMS funds have underperformed the benchmarks, even benchmark being your Nifty 50 and your other large cap companies. And that says a lot, because PMS is supposed to circumvent the problem of a mutual fund and supposed to circumvent all the pressure that is laid onto a mutual fund manager. And 50% of PMS funds have still underperformed the benchmark. So there's something wrong which is going on here. And before I move on to the benchmark problem itself, I want to hear your thoughts on the new regulations and what do you think?
My
What do you think
question is
about it?
my question is this: PMS guys, they don't want this. Clients don't mind it, right? Because they want the freedom to invest. If both sides, both partners in this don't mind, the client doesn't mind, the providers doesn't mind the way it's set up. Why is suddenly SEBI waking up to this and saying, no, wait, hang on, we need to regulate this? It wasn't regulated for a long time. And
Yes.
SEBI was okay with it. Like you rightly said, high net worth individuals is their private choice. What they decide to, how do they decide to spend their money is their wish, their prerogative. But why is SEBI suddenly waking up to it now? It all boils down to what happened with Access mutual funds
Yes.
and the PMS over there and the front loading which happened there. Why don't you explain and talk about that a little bit? That'll give them an
Yeah.
idea
So
on.
yeah, basically, so there's something called front running, and front running is the idea where, so let's say you're my PMS fund manager, and I am a HNI who just called you up, and I say, please buy 5,000 stocks of ITC, which does happen. You have very high net worth individuals who have that sort of liquidity and that money to throw at stocks. And you, as my fund manager, you are my, again, this comes back to the principal agent problem. So, anyway, I call you up and I tell you I want to buy 5,000 ITC stocks. And legally speaking, now you have the authority to purchase it on my behalf. But what you end up doing, unbeknownst to me, is that you know that if you put up an order of 5,000 ITC stock right now to buy, the price is going to go up because of market impact. So maybe it's in my best interest for you to phase out that purchase into thousand blocks and do it over a period of a week. But I'm a HNI. I don't know all that. I just give you the order. So what you end up doing is, first you buy 200 ITC stock of your own, and then you say, okay, I'm going to now put an order for 5,000 ITC stock, because legally you're allowed to do it. And the HNI guy can't come up to you and say, oh, no, 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 this is not in my best interest, because he's waived his right for you to be able to do whatever you want with his money. So now you've basically bought 200 ITC stock and you've placed a 5,000 order from this guy, and you're taking him for a ride because the stock is going to go up by 10% maybe in that particular instant, because you put in such a large order and the market's not able to take that much. And these guys operate in small cap companies. ITC is a large cap company. So now imagine a company with just 20,000 outstanding shares or something like that, some amount like that, and you're trying to purchase a huge amount of that, and you're basically lined your own pocket, and now you'll sell it again. You'll sell it back to me for whatever price, and you've made a quick buck, maybe 10 or 15%, even more than that. And that is something you can do on a repeated basis without ever getting actually caught out, because it seems natural enough, in the sense that you have the complete legal authority to be able to execute my trades. And this isn't inside information as such because you are authorized to be able to do this. So that's
Correct.
what front running is. And it's been made illegal in a lot of countries.
It's as simple as this. You give me 1,000 rupees and you ask me to go to the market and buy you something. By the time I walk to the market, buy it, and come back, I can rotate that 1,000 rupees at 10 times and come back. It's as simple as
Yes.
that. Meaning, I give you and say, do you know, go, I mean, Shashwat, sorry. Here, Shashwat, take 1,000 rupees from me. Go to the market, let's say we're living in a remote village. Say, go to Chennai, catch a bus, and, buy me 20 kilos of cement and come back. So on the way to Chennai from wherever remote village, or along the way, you can lend that money, rotate that money, do whatever you want with that money, profit as much as you want. As long as I get my 20 kilos of cement at the end of it, I don't know what's
Yes.
happening. And this is what was called the Wild West of PMS. And we're not talking about
Yes.
small amounts of money here. We're talking about huge sums of money. And none of it is regulated. And most of these guys are high net worth individuals, like you said. They have immense appetite for risk. And as long as they get what they're looking at, whatever percentage of return they're targeting, 5%, 10%, 12%, they don't care. If they're losing a couple of
Yes.
percentage points here and there, they don't care because they're high net worth individuals to start with. But if I'm not a high net worth individual and I'm the manager of such a fund, here I am a chance in a life, once in a lifetime opportunity to quickly, within a couple of years, become a high
Rack
net
up a
worth
lot of money.
individual myself,
Yeah.
and it's completely legal. I'm not breaking
Yes.
any law. It will only
Yeah.
be an issue if I'm doing anything wrong. I'm not doing anything
Yes.
wrong. So this is where SEBI stepped in and said, hang on, this is a big loophole. It's not even a loophole.
Yeah.
It is a segment of market we are not even present in. So
Yeah.
SEBI said, let me come inside and fix this. Of course, the problem is the way SEBI has gone about fixing it, which you should tell them
Yeah.
about. This whole benchmarking which they've come out with is a little cuckoo.
Yeah. So the thing with SEBI is that it's the man with a hammer syndrome. It's that with a man with a hammer, Charlie Munger says it. For a man with a
For a
hammer,
man with a
everything looks
hammer,
like a nail. So
correct.
yeah,
Yeah,
and that it's like a surgeon operating with a hammer is what SEBI is doing right now. So what they've said is, okay, there is this loophole, but what I'm end up instead of focusing on front runners, what I'm going to do is regulate the entire industry altogether, and that's SEBI for you. And what they've said is, benchmarks in terms of benchmarks, a lot of PMS funds are small to mid cap funds, and what they've said is the way to benchmark it. So first they've said you have to follow so the entire appeal of PMS funds is that they get to follow whatever strategy they want. But
correct.
SEBI has now come out and said, no, there are 4 divisions under which you have to prescribe and tell me exactly which strategy you're following for your guy. Either you do equity, you do debt, you do hybrid, or you do multi-asset. These are the 4 ways you can do it. So they've basically come out and said, you will do what I understand best, and otherwise you cannot do that. And they've clamped it down completely, and they've said, and now they've also said the benchmark against which you're competing are large cap indices. And I don't see much of a problem with this, although PMS funds are saying that it's unfair because a lot of them operate in small cap to mid cap, multi cap. They don't exactly operate with large cap. So benchmarking it against large cap might be unfair, but I don't think so because I follow what Warren Buffett says, which is that small cap is the place where you make most of your money when you're a small time guy. So
Correct.
it's like saying when you're Usain Bolt, you're saying no, my benchmark cannot be that old grand old lady walking down there. It's like why do you want to be compared with a Ferrari? Is my question.
Correct.
You should be okay with being compared with a grand old lady walking down the road. You should be like, yes, please, that should be my benchmark. But
Correct.
at this point, that they're picking PMS fund managers are just picking at nothing. So I don't think that's a fair complaint in any way possible because if you have the jurisdiction to operate in small cap, then you definitely have a huge advantage over the large cap index. So you should be
True.
out anyway. Ideally, you should be outperforming it regardless. So you shouldn't be complaining much about it, is what I think. But with regards to the 4 strategy classification, I think that's complete bogus. And I don't know. You're basically stealing bread out of the mouth of all these PMS fund managers because you're taking their niche and you're saying, okay, that's your niche. Okay, no more.
No more
You're not
niche.
allowed. Yeah, no more
There's nothing
niche.
special about you anymore.
Yeah,
No, but
and the pro.
that's the problem. The thing is, they need to. address this issue of, insider trading. I get that. I
Yeah.
understand that. But like you rightly said, as long as I'm not breaking any laws, you cannot prevent everyone from being honest. Just because of a few bad actors, not everyone can be punished for it. And
Yes.
end of the day, not every high net worth individual can sit there and physically buy shares himself, go log on and say buy. Someone is
Yeah.
going to be his manager, money manager. So instead of me having a company and managing, somebody, I'll have individual contracts with each guy on a personal level.
Yes.
And what's SEBI going to come and do? Come into each bedroom and say, no, you guys should not be sitting here. You must stay there. Keep 20 feet distance between each other. And everything you want to say, you first tell me, then I will tell him.
Yeah.
Nobody is going to invest there. Nobody will
Yeah.
be interested in doing this business. Of course, nature of the beast is that. When you run a casino, a few things will happen here and there, which is sad. You expect everybody to play by the rules, but everybody will try and game the system. It's
Yes.
normal. Trying to game the system is normal. It's human nature. So I don't know if SEBI should be running around with a hammer or a chainsaw trying to open heart surgery with a chainsaw, going, cutting it open, and these guys are just bleeding to death. Like you rightly said, saying that you have to have minimum 5 crores. You're not slashing your market, you're destroying the market. It's
The
like slash
market.
and
Yeah.
burn. From having a huge ocean of people who could be your would-be clients, you've shrunk
Yeah.
it not by a factor of 1 or 2, you've shrunk it by a factor of like 200%, 300%, just shrunk it to
I,
nothing.
I I mean, even the people in India who are above the 2 crore, even 2 crores seems very lofty ideal because that's like 0.05% of India. And
Correct.
within that small bracket, you're like even cutting it down further, saying no more 2 crores, more than double it. Let's make it 5 crores. So you're like just snipping
And not
away
only
at
that,
whatever little,
and the amount of money you have to put in also to be managed is also
yeah,
vast.
has doubled. Yeah.
Yes. So
So
basically, they've evaporated the market. It's like shutting down Burma Bazaar overnight. I don't
I
know.
mean, let's even if you do assume that there are enough people to continue pouring money, you can say expanding middle class, which is not true. But let's say expanding middle class, more people put to put money. Finally, this is the last nail which seals the coffin, and the nail is that the biggest advantage of a PMS is that over mutual funds is the niche we talked about. You've killed a
Correct.
niche. You've basically said you cannot outperform a mutual fund anymore. And on top of that, something which drags down PMS funds over your mutual funds is that there's going to be a lot of transactions. And each transaction which occurs under your PMS fund is taxed on you. Whereas in a mutual fund, you're only taxed on the final return at redemption. So if you
True.
make a loss, then you can write off your losses. And if you make a profit, only if you redeem it. The churning, when your fund churns, there's no taxation. But in the
True.
case of PMS, what ends up happening is if he does churn your funds, it's still under your name, but controlled by the PMS. So
True.
you're going to be taxed each time this man tries to like switch your fund from this stock to that stock and that stock to
Correct.
that stock. So
Very
yeah,
true.
all your
Very, very true.
you've basically taken off everything. You've taken off the cherry, all the frosting, everything in the cake, and you've left him with like the worst part of the cake.
Exactly. So now the question, really consideration is, why would SEBI do this? So are they trying to push mutual funds? Are they trying to say more people should be investing in mutual funds? I don't understand this. So basically, you're saying that means if you're a high net worth individual and you have already, in the article it says one client is like that, who's already have their families have enough money in mutual funds, they want something
Yeah.
else. They have nowhere else to put their money now.
I think the idea comes with being able to the purview because they already have all the faulty system for regulating mutual funds and they have a tight grip. They're basically choking mutual funds already. And this is one dog which has not been on a leash for a long time, ever since this dog was born. And they've basically said, to hell with you, kill you. Let's
Correct.
switch back to the old model. Even HNI guys, all of you guys jump back. You will
Correct.
only invest in what I tell you to,
Correct.
tell you to
When I tell
invest
you,
in.
how I tell you, and how much I tell you, basically, I don't know. It's very weird. That's all I'm saying, man. This whole thing
Yeah,
doesn't
and
make sense.
and even with people who like their regulations are so strict. I mean, yes, it's good to have stringent regulations, but not to the extent where you choke the
No.
financial market. And for
No.
us, like an uncle and a nephew, to be able to talk online, we're already under the purview of SEBI, because anything we say right now could be considered as investment advice if we don't put that disclaimer at the end of our video. So
Correct.
the regulations which SEBI has for anything to do with the financial market is so tight and so stringent that you basically have no other choice but to go with the only path which they've assigned for you.
Correct. And the sad thing is, all this regulation only gets worse every time one or two few bad actors get caught or something goes sideways. Everybody else is punished for it. Society in large is punished, which is the
Yeah,
same thing which a lot of conservative politicians said about Silicon Valley Bank. They said Silicon Valley
yeah,
Bank is a high net worth individual bank. So people who put money there are high net worth individuals. So if they get burnt, they knew what they were doing. There's
yeah,
no need to guarantee them. There's no need to bail them out. They're not the middle class. They're not the working class people there. It's okay. Let them burn. Because if you otherwise you start regulating, you'll get into a position where you over-regulate. Then your government is there in every single thing you do. In every
yeah,
single, you don't have any freedom anymore. In every possible avenue, you have paperwork to do and you have government to do. Whatever liberalization we did, it's like going back, rewinding the clock back, where you have to meet
yeah.
so many babus to get anything done finally. I don't know.
And the idea again is with taxation and the ability to collect revenues and to have a strict eye over. It's like the entire Big Brother adage, which is that you always have someone looking over you and
Correct.
saying, no, no, this is not how you do.
Yeah.
And
And
I mean,
if you're a high net worth
yeah,
individual, why would you keep your money in India?
no
With
reason
all
to.
this headache, why would you? I'd rather take my money out and put it somewhere where I can play with it the way I want.
And the US is exactly that playing field where, yes, in the US, you do have a series of financial crashes. You have bad actors and misaligned actors who end up blowing up the financial system in some way or the other. But the idea still is that you have an enormous amount of liberty. And on top of all the financial crashes which have come in the US, people still flock to the US because they believe that market to be one of the most lucrative places to be in currently. So
No.
I feel like we could rip a page out of their book here.
At the end of the day, in US, even the government, you can take the government to court. You can
Yes.
take the regulator to court. If you think you're being unfairly treated, or your freedoms are being taken away, which are constitutionally your right, you can go to court and argue in court, and the judge can roll these back and force the government to move in ways it doesn't like moving. We've seen it.
Yes.
Anyway, this is a very interesting article. Thanks, Shashwat, for bringing it to us. And I
Yeah.
hope there is some kind of sanity in these regulations and it just doesn't go from one extreme to the other, from being the Wild
Yeah.
West to being a gulag, being locked up in Siberian winters. I don't know. Anyway, this is the way the market always moves. The pendulum goes from one extreme to the other very rapidly.
Yeah.
Anyway, thank you for joining us today on Be Rich. I hope you enjoyed this video. And if you did enjoy it, please think of sharing it with your friends and relatives who might find this video interesting. Please do subscribe and turn on the bell notification icon on our video so every time we come up with a new content, you'll be aware of it. And we would like to thank you again for joining us today on Be Rich.
And the final disclosure being that, again, we're not SEBI registered advisors. And all of this is basically our hobby. And this is something which we do out of our own passion and interest. And we hope you enjoy the show.
Correct. As Shashwat said, and I think we'll ask our team to put a disclaimer in the beginning of the video in English saying that we are not advisors, nor do we claim to be advisors. Please do not take us as advisors. I don't know how much more to say this because a lot of you do think we're giving advice on stocks and are requesting us to advise you on stocks. We don't do that here. We do talk about
Yes.
it, things which are of interest to you and me, that's Shashwat and me, and we think of sharing it with you guys, and that's about it. We're not advisors here. We're not trying to influence you, nor are we trying to influence the market, nor do we think we have any skill or ability to do such things. Thank you again for joining us in Be Rich.
I will be in Kuala Lumpur, Malaysia on the 11th of June this year. That is a Sunday. I want to meet you guys at Sheraton Imperial Hotel between 4 p.m. and 7 p.m. on that day. The Sheraton Imperial Hotel is in Jalan Sultan Ismail area near Quill City Mall. The Kuala Lumpur monorail railway station is available nearby. You can meet me there. For further details, you can contact us on the WhatsApp number below or send us an email at the email given below. my team will contact you at the earliest. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.